Okay, guys, welcome to the trade. We're going to jump into the trading session. No wasting time. Let's go. I'm going to share my screen now, and let's see if I can share the screen. Whatever I'm going to show you guys is very risky. So you only do this with money that you can afford to lose. If you can't afford to lose it, don't trade it. This is very risky, and this is not financial advice. This is just sharing our experiences for your entertainment and for your, what do you call it? Whatever, man, it's not financial advice. If you need that, get that from some licensed individuals. We're just sharing this for entertainment and for educational purposes only, guys. Now, if you have pocket options, you can get to your chart and you can follow along this trade. These are live trades. My students are going to be taking the trades. I have several of them on here, and this account is for one of my students. If you watched our live yesterday, we started that 2 days ago. She started at $100. The account was overdrawn, and now we are trying to build it up. Okay, so sometimes it happens. You take 20 steps ahead, you take 50 steps back, but then you don't give up. You get up and you keep doing it, because you see, you don't control the market. Some days you're going to win, some days you're going to lose. How does that make you feel? That's the most important part. Okay, we talk about your psychology of trading. Mindset has to be, you must have the focus, the confidence, and the consistency. Key. These three things are key. And make sure you subscribe to the channel. Make sure you hit the bell notification so you can attend all our lives. And for those of you who want to learn, you can join our masterclasses. Go and join the Smart Wolf Club. You can join the masterclass, and you can work with some of our coaches. We have coaches from all over the world. These are fellows who have been doing this for many, many years. Some of us have been online since 1998. All right, let's go. Let's share the screen and we take a few trades. And there we go. So we just took some trades, and you can see we are now at 2082. Our goal is to grow our account by 3% every day. For this student, she wants 3% every day. That's how much risk appetite she has. Some people have a higher risk appetite. They want to grow their accounts with a higher percentage, and there are some people who have a very low risk appetite. So therefore, they want to grow their accounts by 1% every day. 3% is okay. It's a moderate risk, and it's attainable. It's achievable. So the goals you set have to be realistic. I know some people do show you that they come in here with $10 and they make $1 million before the end of the session. I can't promise you that. Okay, it can't happen. I'm not saying it can never happen. Maybe it can happen. I don't control the market, so I don't. Okay, it has never happened to me, and it has never happened to any of my students. Actually, the reverse may likely to happen. You're likely to lose more than actually make it. That's why 99% of the people who start trading, they don't succeed. They lose and they blow their accounts. A lot of students blow their accounts because it's a risky thing. Otherwise, anybody would be able to do it. Okay, anything online is risky. It requires some mental toughness. So, guys, let's take the trade. So, we're going to start with $1 because this is only $20. The account is $20. So we're starting with $1. And we're going to use what we call so what is 3% of 20? That's a few cents. So we're going to take 5 trades. Okay, level 1, 2, and 3, and 5. If you don't understand that, check our previous training. I'm going to put a playlist here which says KISS strategy. You can go and watch all those videos because we don't want to keep this live too long. Okay. So how do you get these assets here? Again, if you don't understand, go and watch our previous videos, but I can show you. You just go right here, and you're going to select the assets that are paying 92%. You can see there's quite a few here. These are all paying 92%. We go for those because you don't want to risk more than you can afford to lose. Okay? So we are going to look at these assets, and we're going to pick one that's behaving. And what indicators are we using? We have the Bollinger Bands. You can see the period is 20, deviation is 2, and the Bollinger Bands are these things you see here. They have the outer band and the outer bands, and there's a middle line here, which is like a moving average. Sometimes it acts as a support. And then we have the CCI, and you can see we are using default settings for CCI. Period is 20. And then we have the EMA, moving average 8 EMA. Okay, so this tells us when to take the trade. For example, you can see the candle, the red candle crossed the EMA here, and so the second one we're gonna jump in for a sell option. Now, once we hit the outer boundary of the Bollinger Bands, then we are likely, the trend is likely to reverse. So taking a trade down here, well, where the candles are right now is very dangerous. Again, the CCI shows you that this is an oversold position and it's likely to change and start going up. So we can wait and see what's going to happen. But before we do that, we can look at a different one, okay? So here you can see exactly, it's a downward, it's still going down, 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 down. They crossed the moving average long time here. So it's likely to start going up. And you can see the Bollinger Bands is like a squeeze and they're widening up here and they're all pointing down, telling you it's a very strong downward trend. So if you are to take a trade here, you probably take a sell trade that will increase your probability of winning, guys. Yeah. All right, before we take trades, let's say a word of prayer. In the belief of the power almighty, we pray that the trades we're going to take today shall be successful. We also pray that whoever is going to follow this strategy will be successful. May the markets be good to us. May the markets be good to all our students. May the markets be good to all our viewers on YouTube and those who are going to come after many years, that they may also be successful. In the belief of the power almighty, we pray. Amen. Guys, we don't care what you believe in. Whatever you believe in, learn, practice, and teach. Okay? Master teacher says that if you believe in something, learn, practice, and teach. If you believe in binary options, trading Forex, learn, practice, and teach. Okay? I have a student here. This is just, by the way, who has taken some trades today. You can see this is Forex. And she has taken some trades, and you can see she's in the money right now. She's at 181, 184, 183 dollars in terms of her profitability. Okay, and she just took the trades. So this is going on, and hopefully some of the trades have not been closed for a couple of days. Yeah, and she's learning how to trade Forex through our Forex trading masterclass. No stop losses, no take profits. Okay, we use a very simple strategy, the 8 EMA, and also, of course, the candle reversal patterns, and we use what we call candle analysis. You learn how to analyze the candles and you take the trades. And you don't have to be glued to your charts. You take the trade and you leave. So right now, you guys can see we are back to our trades. Let's go back. There we go. This is what we are focusing on. So right now, we can take a trade. If this closes above as it's going up, we can take the trades. Okay, you can see it's coming down. If it closes below, we're going to take a sell trade. So let's see, we have 13 seconds, 11 seconds, 9 seconds, 7 seconds. If it closes above, we're going to go above. But it seems like it is closing below. So we're going to take a downward trade. Our goal is to take 5 trades because 3% of $20 is very little. So to make it worthwhile, we're going to just look for 3%. So let's say it was $20. Internet is very slow because we are sharing screens with the students. And this, see, took a long time to. All right, let's try that. 20 times 3%. We want to grow this by 3%. So 3% of 20 is 60 cents. So we just want to make 60 cents, but I'm sure we can make more than that if we win these trades. You can see this is in the money already, so it's going to push us way above our target probably. You can see our analysis was correct and accurate, and there we go. We are at 21.74. So literally we are way above. That's our first trade. We're going to take our second trade. So let's look at another pair, guys. Okay, you can see this is crossed the, it has crossed the moving average. Let's see where it closes. Okay. Closes below. Okay, it's closing below, but the candle that forms is green. There we go. It's pushed all the way. So it's a strong downward trend, and you can see the CCI is doing that. But it has reached the lower boundary of the Bollinger Bands, so we can't really get on this at the moment. So we will wait and wait and wait. Okay. Let's look at a different pair. Again, that's going all the way down. It's on the outer boundary of the Bollinger Band, and this is going down, 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 down. Okay, that's coming down now. So when it closes down below this line, it's going up. Till it crosses the moving average. Crosses the moving average. Okay, that just crossed the moving average. So it's going down, 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 down. Okay, we jumped in because it crossed and it is going down. So hopefully it will go all the way down here. The candles are 30 seconds. Somebody is asking how long are the candles? 30 seconds. This is our second trade. Okay, you got to take time to analyze the market. So the students are doing that very well right now under my watchful eye. Okay, but doesn't mean you're going to get it right all the time. But if you do your due diligence, it just increases your winning rate. Okay, and don't risk much. We normally risk 1% of the account, but in a case like this, the account is very small. Okay, you can see this has just changed directions and it is now going against us. So it went up and that gave you the loss. So we're going to go hedge and go the opposite direction. Very, very simple. You just take an opposite trade to hedge your loss. Okay. And if you believe it is a strong trend, we could use our martingale factor of 2.5, but in this case, this account is so small, we are not going to try to risk anything more than we can afford to lose. Okay. So we're just going to keep it simple, stupid, KISS strategy. Okay. However, you can see this is coming down here. So it is really playing a game against us. So maybe we look at a different pair. Yes, this one is all the way up there. So we can take advantage of this as it starts coming down. But you can see the moving average is pointing up. So we did win that trade, guys. You can see it's pushed us ahead. Okay, so we recouped our loss and then some. And this one here, okay, you can see that's coming down really strong. Okay. We jumped in there. Our belief is that this is going to push down and then push up for us to be in the money. The CCI has gone down, and this is going down, so we are going to take an opposite trade to hedge our loss. And we go and look at a different pair. This pair, you can see if it closes below here, we are going to jump on the downward side. This is the sell. Nope, it's closing above, so it's time to go above. We are waiting for that one to close. Oh, it's going up and down, so that may just deny us. Yes. Yes, that just went below. And now we have to hedge our trade. We're going to have to hedge our trade with this one. Yeah, if you just take an opposite trade, that's what we call hedging. It's a key strategy. So this is going up, for example, we just take a call option. If we see that it's going down, we hedge with that one. Very simple. Okay, so we're hedging. Hedged. These are hedged trades. Okay, so that was a hedged trade. Goes up and down, up and down. Hedged trades, let's see. Hedged trades. Okay, you can see that one crossing above, so we're gonna hedge that. Goes up and down, up and down, up and down, up and down. We are hedging the trades up and down, up and down. This is downward. You can see that it's all pointing downwards, all pointing downwards. So we're gonna hedge that one. And now it starts going up, so we're gonna hedge that one. We hedge the trades going up. Okay, so we're going up here. This is all the way up. So we're going to try to get it as it goes down. Okay, so we're going to try to get it as it goes down so we can hedge our trades. Okay. Okay, we're going to hedge our trades with that. As it goes down, the goal is to hedge the trades. Okay. So the goal is to hedge the trades. The market is pretty rough tonight. So we're going to have to hedge that. So the CCI sometimes gets stuck right there. So you can see, makes your life easier. You have a very small account, you risk a small amount, so you just keep on hedging and you use less than 1% of your account. So you can see here the momentum has really decreased, so we wait for this to start coming down and we go in for a sell option. Okay, you can see this indicates a continuation of the trend, so it's just going to continue to go up. It's a tricky, okay, because you can see they're all pointing up. This is up here until we start seeing the candles coming down. Okay, then we can jump in for a sell trade, and if it goes the other way, we're going to hedge our trade. Okay, so we're going to just hedge our trades, and let's see if it's going to go the other way around. Not necessarily, it went the opposite direction. So we're going to have to find a nice hedge for this. You can see it's not following some rules for some of the pairs, okay? And you're going to learn that really quickly, that not all the time. This is not going to happen all the time. Yep, okay, so we're going to have to hedge something here. You can see that's going down. So we're going to hedge our trade. Now we need to hedge 2 trades. Hedging 2 trades. Okay. Okay. So it did run away from us. The hedging didn't work. Okay. As you guys can see, the hedge did not work. Instead, it took a big chunk of the account. So what do we have to do now? That means our student is going to have to take more trades than they had anticipated to try and recoup the loss. All right, so let's go and look at the market now. Let's look at some pairs. What's the general trend there? You guys can see they're all going up. Okay, so we're going to take a call option here. And another call option here. And we're going to do another call option here because they're all going up. And let's look for another call options. Yes, there is a call option. Another call option. So again, patience in the market. You gotta be very patient because you see what happens. Sometimes the market doesn't go your way, so you have to decide. You leave the market and you can have a drawdown, okay? So you can leave to play the next day, okay? So you can take the drawdown, the hit, and start your day tomorrow, fresh, okay? Start the day the next day afresh. Because sometimes the market is unforgiving. We don't control the market. Something could be happening in the market. And you're trading OTCs, you're trading against the broker, very risky. The broker might be out to get your money. So the sooner you realize that, you get out of the market and then come back the next day. Okay. Yeah, so you can do that. You can come back the next day. And sometimes it can stay up there the whole day. Yeah, it's supposed to come down, but it will stick at the top. And that's how they're going to take your money. They simply won't come down. They won't follow the conventional rules. That's part of the market. That's why 99% of the people don't succeed when it comes to trading. Yeah, a lot of people just don't succeed because the market is unforgiving. Yes, the markets are unforgiving. The markets are unforgiving. The markets are unforgiving. Yeah, like you can see now, what's happening to the account. There you go. The markets can be very, very, very unforgiving. Okay, this is going up, up, up. See, that's going up, up, up. So we wait until they cross the moving average, like this one has crossed. Closes above, we're gonna jump in. There we go. Too late. Too late. The trade time is 1 minute because some of you are asking how long is the trade. The trade is 1 minute. The candles are 30 seconds. You're using these three indicators here, and of course just your market analysis. So this is starting to go up. We can join that. So we started at 20, we are now at 14. That means lost $6 over a very small account. That's dangerous. Okay. You can look at different pairs. Let's look at, you can do stocks, try different, what are they called? Different assets. Yeah, you can see they're behaving similarly. So this is closing above. Yeah, I can just follow that. You can see this is at the top. We are waiting for it to close, come down. Starts hanging down, you can jump for sale. Starts going up, it keeps on going up, it's risky to enter. Okay, and that's why we got the losses, because you could see we were taking risky trades. Okay, but that's how it is with some of these trading, these options. It's risky trades, very risky. You can see that's going down, but it's a risky trade because this can just decide to go up. Okay, you can see that's stuck there. That's still stuck at the top. This one is still stuck at the bottom. Okay, that has changed. It's now going up. But as soon as we jumped in, it goes the opposite direction. Yeah. You can see the way it is behaving. All right, so we're not going to hedge that with that pair. It's just going to hand you an L outrightly. You can see even that one. Any questions, guys? Any questions? Students want to continue. Do you guys want to hang out here, or you want us to stop it here and continue tomorrow? Okay. Yeah, so maybe we should cut it off now, and then we continue tomorrow. You took that one? Okay. Risky, though. You can see because the CCI is already pointed up. It's somewhere in the middle. You're just going past the median, the moving average of the Bollinger Band. This normally acts as a resistance, sometimes as a support. So it just lowers the momentum, and you can see they're already coming down. But hopefully there's enough buying pressure. So I think we should end here, guys, and we continue tomorrow. Okay? All right. Thank you. Have a good night.